levels. In this video, we're going to talk about resistance levels. They're the exact opposite of support. So what we know about support levels are they are great entries into a trade. So you're going to want to buy on support level bounces, just like we discussed before. Buy the dip, but only at major support. So the exact opposite of support is resistance. So according to Investopedia.com, it says resistance or resistance level is the price at which the price of an asset meets pressure on its way up by the emergence of a growing number of sellers who wish to sell at that price. Resistance levels can be short-lived if new information comes to light that changes the overall market's attitude towards the asset, or they can be long-lasting. In terms of technical analysis, the simple resistance levels can be charted by drawing a line along the highest highs for the time period being considered. Resistance can be contrasted with support. So just like how we were finding these low points where the price is dipping to, we're going to find those high points where the price is getting stuck at, so where people are selling. So if we look at this pattern, for instance, here, so we'll just take these as just basic support levels here in resistance. So what we know about support is we buy on support and we need to sell on resistance. That's the second part of that phrase. Buy at support, sell at resistance. And the reason you want to do that is because most people don't know when to take profits. When they buy into these projects, when they buy Bitcoin, they're holding it no matter what. And, sure, that might be an okay trading strategy. Let's say you do want to hold. Let's say you buy, let's say you follow that fundamental rule like we discussed. Only buy major support level bounces. Only buy on support. If you do that and you hold it and the price is going up, I mean, let's look at it here. If the price hits this top resistance level and you bought it way down there, let's see, where did that leave you? That's 41% profits right there. So it's a great strategy no matter what. If you buy on support level bounces, you're going to be golden because you're going to have a way higher chance of, taking home good profits as long as you lock in those profits. And that's the importance of selling at resistance. So I'll touch on like one trading strategy. We'll dive deeper into it later on, but like one is trading the range. So you trade a range of the price. So if the price ranges from this support and it ranges up to the top of resistance and it ranges back down to support and then it ranges back up to resistance, one strategy that works, and I do it all the time, is trading the range. You buy here and then you sell somewhere up here in the top. You can sell here, you can sell here. Obviously, if you find major resistance, you can sell close to there as possible so that way you lock in those profits. And then once the price comes back down here, you rebuy it. You buy it back. So you made money here. So if you bought at support and you sold at this resistance, that's about 30% profit. Now, if you bought it back here, and then let's say you waited for the next touch of resistance at top here, that's another 28%, 30%. So you just made 60% as opposed to just holding it the entire time from here to here, you made 38%. So you almost doubled your profits by doing a range trade. So, and that works on a lot of the time for shorter period time frames, but you can do this on a larger scale. So if you zoom out to like the 4-hour chart, if you got stuff to do and you can only really trade like once a day, place your orders, I mean, you could still do pretty well trading the range. You just have to be diligent to make sure your alerts are set just in case something happens. Because the exception to the rule is once your support level, if that gets broken and the price, for instance, was a drop to the downside. So let's pretend, since we don't know what this price is doing, let's pull this back here. So let's pretend the price prints here. We're just thinking theoretically. Let's say it drops down here. Let's say you have your buy order set right at this support level, right? That's 43,000. But let's say the price, instead of bouncing here to the upside, let's say it breaks down. What you're going to want to do is, if this happens, it's all probability because it's not a guarantee that the price is going to bounce like you hope it will. I mean, you have a stronger chance if it happened a lot in the past, but if it does happen where it breaks this support level, you need to have an order to sell it automatically. So that way you cut your loss quick and then you wait for the next move to take place. Because sometimes what will happen is, instead of getting a bounce and it breaks to the downside, sometimes it'll break right back into the pattern. If you close your position here, you took a tiny loss, but then you also missed the move. That's okay. Always set a stop loss, and I'll talk about those more in depth, but you always want to set your stop loss outside of where the pattern is. Because once a pattern is broken, it's invalidated and you just need to wait and move till the next confirmation of a move is available. So that's how you hedge your bets. So you take on less risk when you have tighter stop losses, at least when you buy on support, because then it cuts you out. Because what ends up happening if you didn't have a stop loss, the price kept dropping. Those profits you might have made here in this range, you just lost them all, and it was all a waste. So just make sure you take profits. And then also with support and resistance breaks, we'll talk about breakouts in this next video, but just keep in mind, always buy on support and sell on resistance. That's the main takeaway from this one.